Well, howdy there, partner. Look at the stock market, up 1.15% here on the S&P 500, heading into the most important earnings of this earnings season, which is Apple and Amazon. Things are going to get a little bit crazy in the next, or I should say over the next 24 hours in the stock market. And actually, Janet Yellen, if you guys are unaware, she was actually the Jerome Powell, the Fed chair, for 4 years. And she is coming out making some statements right now, like the U.S. economy is resilient, and says the U.S. economy has entered a new phase focused on steady, stable growth. We all know this is probably not the case, at least right now, at least until the Fed tightening cycle is getting closer to an end. So it looks like more lies, but it's fine. The only thing the markets really care about is Apple and Amazon. So that's what I want to focus in on here in this video, as well as go over everything AMC stock that you guys need to know, because tomorrow we will see either a major rally in the stock market or a major drop in the stock market, and I have my own personal opinion on all of this. So we're gonna dive into this video. Hit that like button and subscribe to the channel if you guys want to come trade with me live in real time. Link down below in the description. So today is broadly characterized by some decent earnings yesterday. There was some bad earnings out of Teladoc and a couple other companies, but by and large, earnings have been okay. They haven't been what we expect, but the markets are really looking at earnings, especially with something like Facebook, Microsoft, Google, where all three of those companies have missed earnings by quite substantial amounts. Even Facebook saying we are already in an economic slowdown and they are cutting the spending and all these bad things that have been said. The markets are looking at earnings and they're saying, well, they could have been a lot worse. And that's the key. They could have been a lot worse. So inherently that is bullish. The stock market likes to be more bullish rather than not. And what Fed Jerome Powell said yesterday was basically that the data will control what the Fed does. And we do not have another Fed meeting until September 21st. So what does this mean? This means that we have 2 CPI readings, 2 PCE readings. We have 2 unemployment reports that come out from now until that next Fed meeting. So we have a lot of time between now and then to either price in a 50 basis point rate hike, as we are right now with about a 96% probability, or to go as high as a 1% rate hike, possibly even higher if inflation does not go down. So right now, the data is going to be the biggest thing. Now, specifically with Apple and Amazon, besides the data, those companies are going to be the holy grail of market movers. And why do I say that? Because Apple is over 7% weighting of the S&P 500 just in that one single stock. So let's say Apple had really good earnings or really bad earnings. Well, if Apple rallies, it's kind of like when Netflix did well, Disney did well, Fubo did well. Basically anything subscription based, anything online did well those days, right? And that's what really has helped to fuel this rally. Well, if Apple has good earnings, everything will do good. If Apple has bad earnings, well, everything will do bad. And when Apple is 7% of the market weighting, let's say we get a 5% down move, and then these other stocks take down moves, well, that's going to be a 2, 3, 4% down day in the broad market. Same thing with Amazon, but Amazon is only about 3.22% weighting of the S&P 500. So Apple will be almost twice as important to the broad indexes. And really what we're seeing with Apple right now that is kind of alarming heading into earnings, which is definitely not a good thing, is that Apple is up over 20% from the lows we just seen right here on June 16th to where we are at right now. So if we draw a trend line, we're up actually after today's move. I mean, you're up like 22.5%. So it's been a big move already, and this is probably already factoring in good earnings. So it's like if we sell off into the Fed meeting, you're more than likely to bounce after the Fed meeting. if we rally into the Fed meeting, you're more than likely going to fall after the Fed meeting. Now, obviously, this one was a little bit different, and today was very volatile. At one point, the S&P was down over 0.5%. Now, we've completely flip-flopped here. But same thing goes for Apple. When the stock is up 22.5% in just over a month, well, it doesn't take a lot to push the stock down if you get something worrisome on earnings. And I think it's simple. Econ 101, a lot of funny money got printed out there, and a lot of it went to Apple. And Apple was a stagnant business before. Right, Apple was a very stagnant business before. Apple didn't really have any growth to it. 2018, 2019, 2020, like, this is not a company you would consider a growth stock, looking at this revenue and these earnings, and that's why it was valued much lower and was a much smaller weighting of the S&P. Well, now it's done its thing in 2021 and the first quarter of 2022. And we'll see if that narrative can hold up for the second quarter. We've seen Apple slow down hiring, a lot of worrisome signs, and it's not going to make for a good situation if people fear that Apple growth is gone. So keep that in mind. Even Yahoo Finance says Apple is overvalued comparatively to something like a Facebook, which is undervalued, Google that is undervalued, or even a Microsoft that is around that near value, right around where it should be trading at. Now, besides all of that, what's actually happening for AMC stock, and what do I think will happen with Apple and Google earnings, or Amazon earnings? We already got Google, Amazon. Well, I think the consumer sector is going to be weak, and Apple and Amazon are in the consumer sector. Would I necessarily bet the farm on it? Would I put my whole portfolio on that statement? Obviously not, but I do have some personal trades for Apple and Amazon to the downside, and that's just how I feel. You definitely want to get more time on whatever trade you're doing, but after this rally that we have seen in the S&P and Apple specifically, you got to be a little bit concerned and start preparing for another downside move. Now, with AMC stock, AMC is up about 0.5% at the time of recording this video, up about 0.48%, and we could see the positive order value is 41% for AMC. 2 orders totaling $66,8800 for the day, so not a very high actual dollar amount. 41% positive order value is not very large in the grand scope of things. And for the short interest, you're sitting at 19.56%, about $1.46 billion worth of short positions on AMC. Free flow out on loan, 28%. Shares out on loan, 144 million. Days to cover, 3.41. Cost to borrow, 9.8, and 100% share utilization. Cost to borrow max, 12.51%. Cost to borrow average of 9.99%. Cost to borrow minimum of 8.84%. Like I've said, these numbers are still very, very high. As far as the option activity for this Friday, for tomorrow, you have about 115,000 calls that are out of the money and about 15,000 calls that are currently in the money, 10,000 puts that are in the money, and about 29,000 puts that are out of the money. So there is some call activity that could help boost us up higher, especially tomorrow. If you do see some bullishness out of Apple and Amazon, I would expect AMC stock to make a pretty big move higher. You have seen a lot of very bullish options coming through from hedge funds over the last couple of trading days, specifically this $1.5 million order for January 19th, 2024. You're getting $400,000 orders pretty much back to back, over $500,000 order right there. And this order that we talked about not too long ago of about $1.3 million. All of that is a pretty good sign that AMC is probably in for some bullishness over the short term. But what do hedge funds do when they're potentially afraid of market downside? Well, they go and short the stocks that can move the most. And AMC is definitely a part of stocks that could move the most, especially if you get weakness in this so-called consumer, right? If people fear the consumer can no longer do things and they're cutting back, well, AMC looks like a pretty good stock to short in that scenario. But hedge funds, they're not that smart. You do not want to bet against the American consumer going to movies or, going out to cruises or doing something that involves traveling or having fun. You just don't want to bet on that right now. It's not the time to bet on that. Now, as far as the economic data that comes out tomorrow, you do have some things which will be important as well. You do have personal spending month over month and personal income month over month for June. Those are expected to come in positive. So depending, how strong these are, that could push up the federal funds rate projections, the Fed funds rate monitor tool. And what that is going to do is price in, more rate hikes to come. And that's what the markets really want to avoid right now. Same thing with PCE price index that comes out tomorrow as well. If you get that is just too high, and we're expecting a 6.3% read and a 0.6% month over month read for June, well, you're also going to start expecting higher interest rates out of the Fed, and that is what is going to move the markets going ahead into the future. Data will be very important. Apple and Amazon, depending on what they do, that will really set the trajectory and set the mood for the markets probably over the next week or so. So that is going to be all for this update. Things are going to get a little bit crazy once we get into after hours today, and you guys will definitely want to stay tuned to hear what those earnings are, to get those reports. We will cover it here on this channel, so subscribe to the channel so you guys get those videos when they come out. Hit that notification bell, like the video, comment down below what is your thoughts on Apple, Amazon earnings. What are your thoughts about the data coming out tomorrow? Are you playing a little bit defensive right here? Are you starting to buy some puts? Are you trying to protect your portfolio, or do you just think all-time highs are coming? Let me know your thoughts on that down below in the comment section. If you guys want to come trade with me as well, link down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.